Hey, this is Julie with jautotradingstrategies.com. Got my domain name back from iPage. Yay! About time. You know, they actually told me that I could not have my domain name back that I had paid for because I don't want to use them for hosting anymore. But I love Google. Google is the best. You get so much with a Google blog, including the ability to use your own domain name. So there you go. As far as trading today, I am looking at the daily and see that we broke through our wedge to the downside in Globex today. This could be a breakout fake out, so I'm keeping my eye on it. Here is last year's value, and we were $48 away currently from $47.29 from last year's value. So it's way oversold, and there's no reason for price not to break out of here and come back up into this $65, $75 range. But on first blush, it looks like we're flushing back down into the current year value, and the current year point of control is 55.97. So that's where I'm looking for this to go to and fill in this air pocket. But and 51.80 is the bottom of the yearly value where I would expect to see a bounce. However, with that said, I'm not sure this up move is not over. This is still a bull flag. You've got your flagpole and you've got your consolidation, and this has been one hell of a chop-o-matic consolidation. We have been consolidating since May and just chopping ourselves up in here really bad. And we actually started chopping ourselves up in April with a little bit of an upthrust here, but mainly it's been sideways since mid-April, pretty much. So if this is a breakdown and we can trust it and go with it, that's one thing. But I've learned never to trust crude. Never. Don't trust it as far as I can throw it. Just trade it. So I am looking at my 60-minute and seeing a bit of a breakout area opportunity right here. I got two green candles right at my 3-day value bodies over here from June 22nd. So we broke through the bodies. We've already come into the wicks and we're popping up. So if we break our current low at 59.35, all bets are off and I'm short, no doubt about it. But since I have a little bit of a KD cross going, which says that momentum is coming off this does not mean that this is an immediate direction shift. This means that there's momentum shift. And I've got my two green bars right here on my 60-minute. I would not be surprised if we didn't break this 59.60 and come up into the previous day's value area high, which will be a decision point. Will probably bounce up and down. So my guess is that we come up here today, shake out the shorts, and then fall off or hit the value area high and continue up. I mean, you never know with crude. So it's either going to do that, or it's going to do that, or it can just simply break this level here and just go straight down. Okay, which I don't see happening. That would be too easy, especially since we're seeing that momentum is slowing down a little bit. I would either see a sideways action choppy, or break up and out of the current range of value. So I'll just keep my eye on it. If I do get below 59.35, all bets are off and I'm selling, both hands and feet. So I'm going to try to stay out of the Chop-O-Matic. I increased my contract combine to 150K to allow me time to get out of the way of myself inside this choppy range, and I will be trying to enter when price comes up and hits a level and gives me a reversal on a larger range bar, so that I can stay with the move. But that's not working in a sideways market. There's just impossible to trade it that way. It looks good on theory and it looks good on paper, but you get inside this where it just chops you up and down inside of here. So what I'm going to do instead is get a shorter ATM strategy on bigger position size. So I can trade up to 15 contracts now. And if I get 6 ticks on 6 contracts, that means that I can have 5 ticks because of the 1 tick slippage, $250 on 5 ticks. And I can put a break-even stop on that, so I can lock in $250 profit and leave a runner on my 6th one to continue moving up, and then I can keep scaling in that way. I have contract position size now that would allow me to do it, and I have more room to allow me to have a little bit more risk capital to trade with. And you just have to have that in this market where you try to get a trade going on and you keep getting these up and down patterns, especially when your profile is so narrow, and you find yourself in the middle of a chop zone and it's too late to get out of it and you're just sitting there killing yourself. So hopefully I will stick to my plan of waiting for a level and taking my trades once I've got my signals set up for my turns, and then waiting for an area. Like right now it's bouncing back off this value area low, but I think that's going to be another fake out breakout. I don't see this breaking through 59.39 right now because the momentum is coming off on my 60-minute chart. But momentum can, on the other hand, let me just say this real quick, momentum, this K can uncross that D and start coming back down also. So follow price, and if this gets down into the oversold here, it could flush down and then pop back up. You just have to really keep your eye on this momentum on your higher time frame. So that's my trade plan today. I'm going to be watching 59.35, expecting a break higher. If this K does cross back down from that D, I can see it right here, my red over my green. Once my red goes under the green, I know that the momentum has shifted. But right now, the red, the K is on top of the green. So that means momentum is slowing down. So I would be expecting price to come back into value. That's how I read it. But once that K comes back underneath the green, the D, that means momentum is really, really, really popping lower, and you can feel really good about hitting those shorts. Thank you so much.